뉴욕 증시에서는 지난 10월 말부터 산타 랠리가 이어지고 있습니다. 올해 많은 비관론 속에 주식을 충분히 사지 못하신 분들이 많은데요. 지금 와서 주식을 사는 게 좋을지, 내년 연착륙이 예상되는 내년을 감안해서 얼마나 무엇을 샀으면 좋을지에 대해서 고민하시는 분들이 많을 거예요. 오늘 베나탄의 글로벌X 헤드쿼터를 찾아서 내년에 어떤 투자를 하면 좋을지에 대해서 좀 들어봤습니다. 여러분들에게 전해드리겠습니다. 오늘은 글로벌X의 존 메이어 CIO를 모셔서 말씀을 들어보겠습니다.
안녕하세요.
Great.
I'm John Mayer. I'm the Chief Investment Officer of GlobalX. I've been with GlobalX about 6 years. GlobalX is an ETF provider that has over 100 different funds in a variety of different areas, thematics, things like AI, cloud computing, financial technology.
What's your AUM right
We
now?
are approximately in the US, $42 billion,
Wow.
give or take. The last few days, the AUM has moved up. The market breadth has widened out, and
great.
so the market is doing pretty
Money
well.
flow to the ETFs right now from the money market fund.
Yeah, for the better part of this year, investors have had the opportunity to be in a risk-free instrument of money markets or short-term treasuries yielding 5.5%,
Right.
something that investors have not experienced for a very long time. But how long are people going to be happy with 5.5% returns on an annual basis? Right now, this year has been dominated by 7 large stocks that everyone talks about, the Magnificent Seven, have done very, very well, have powered the performance of broad indexes like the NASDAQ and the S&P. The big question has been AI, when is AI, the story, going to broaden out? And over the past several weeks, we have seen a broadening out of mid and small cap names participating in the rally. That's sparked interest from investors to say, hey, maybe it's time to move some of that money market fund back into the equity markets. And that's what we're experiencing right now.
Do you see a lot of FOMO right now?
I do. It's hard to say that this is real or just FOMO. There are some real concrete things that have happened. So the Fed just recently said that they're looking to possibly cut interest rates 3 times in 2024. They explicitly said that. While the future markets were already indicating that, they explicitly said it. And so that sparked a lot of interest, a rally on the long end of the curve, and getting back into risk assets, investors moving into risk assets, and moving in on the entire spectrum, not just the large cap names that everyone has loved this year that has powered the index. So there are some concrete components. So when you think about if rates do decline, the borrowing costs for smaller and mid-sized companies do decline. So that takes some pressure off of these companies, potentially margins increase. So there is a real aspect to what's going on right now, more than just a fear of missing out.
After the last week's FOMC, there is an expectation that the Fed will begin cutting rates from March next year.
Right.
Do you expect that they will cut from the March?
Well, I think the Fed has to be careful. So what they've been trying to do over the better part of 18 months is to tamp down inflation. And they've been fairly effective in doing that. They were a little late to the game. They kept thinking and saying that inflation was transitory because of all the supply disruptions because of the pandemic and China lockdowns and whatnot. So I think the Fed has to be careful because they only have blunt instruments to help fight inflation. They have interest rates and they have quantitative easing or tightening, right? So we are in a quantitative tightening cycle. We have been in a tightening cycle for interest rates for the better part of 18 months, and there's a lag. The Fed policy takes about 18 months to start kicking in, and we are experiencing that. Inflation has been coming down, so that's a positive. But the Fed has to make sure that they don't reignite inflation, because if they do reignite inflation, then the consequences are going to be much more severe from our perspective, and the Fed will have to take deeper, stronger action.
The finance conditions are eased so much in recently, and do you think how much possibilities that
Fed action and eased financial conditions reignite the inflation?
Well, first of all, the Fed, all they've done is say that potentially they could cut next year. And it's still data dependent. So there's still the possibility that they'll leave rates higher for longer. There's a 60% chance based on the futures market that they'll cut in March. I don't think they'll cut in March. I think it'll be more towards June, even into possibly the third quarter. Because again, I think it's better to be cautious than to potentially reignite inflation.
10-year yield has fallen below 4%. And do you foresee further short-term declines? And what is your rate outlook?
Well, the 10-year moved from 5 to below 4
Round trip.
pretty quickly. And exuberance on both sides, you could argue. Now, with rates having come down, and think about the U.S., the mortgage market. So rates touched 8%, and now they're
6%.
Yeah, not 6, but 6+%, depending on the type of mortgage that you get, the type of credit. The housing market in the U.S. it has been tight. It loosened up a little bit as rates peaked at 8%. When they come back to 7 or 6.5%, investors or purchasers of homes think, well, I better get in now because the prices of those homes are going to go up. So it's creating that tight housing market once again, potentially. So I think that's an issue to be concerned with. But it loosens some financial conditions for companies too. So when rates do come down, companies can borrow more easily, can increase margins. So I think it's a positive. So it's kind of a balancing act. The Fed doesn't set long-term rates; they set short-term rates. Their comments could influence long rates, but really the market set those rates.
How much do you expect the 10 years move downward or upward from now on?
I mean, I think we're within a band of 25 basis points up or down. I think this is more fair value.
And that means, do you see the next year downward limitation will be the 3.5 or something like that?
On the 10-year?
Yeah.
It's possible, but I would say more in the 3.75 to 4.25 range is where I would put it.
Oh,
A fair value.
Okay, got it. The stock market has risen by 15% in the past months and a half. Do you believe the Santa rally will persist? And if so, how much further gains do you expect?
From a valuation perspective, you can talk about the Magnificent Seven stocks having higher valuations than the rest of the market. So if you remove those, and I still believe those have legs for a variety of different reasons because they're uniquely positioned to take advantage of the AI revolution. But if you remove those, valuations aren't historically out of whack for most of the other S&P 500 components. I don't think the market is overvalued. Do I think it's going to go up 20% next year? No. I think we'll trade in a tighter range. There are aspects next year that lagging effects of Fed policy still has to play out. We're not going to see a strong GDP growth as we saw in the third quarter, in the fourth quarter. So I think GDP growth does slow down. I do think the labor market does loosen up a little bit, but unemployment is still at a very low rate of 3.7%. So I don't believe that you'll see a retake of 2023 next year. I think you'll have more moderate returns for the broader market, technology as well.
Not except the Magnificent Seven.
Well, I think they still have some room to run. It all is based off of, the Magnificent Seven. What do they have going for them? NVIDIA certainly has a corner on the chip needed for generative AI.
Right.
There are other, whether it be Microsoft or AMD, they're trying to compete. It'll take a while. Also, the other companies, what they have is just this tremendous source of data and the ability to create products that potentially companies will purchase to improve efficiencies in many different areas, whether it be in the medical profession, in the law profession, inventory management, publishing, the list goes on. So I think we're starting to see that AI is really going to be a strong driver of the improvement in efficiency. So if you look at the CapEx cycle, remains very strong for the S&P 500 components. I think AI is one component of spending that's going on in many of these companies. If you listen to the conference calls, the amount of times AI is mentioned in those conference calls increases from quarter to quarter throughout the year. So it's important, and it's a driver of both top and bottom line growth.
And somebody told me that in the movie Magnificent Seven, and in the end, only 3 survived. So if that happening in the stock market, and would you pick up only 3 of them?
I mean, you're talking about large, well-established companies, so
Yeah.
I don't think that any of the Magnificent Seven are going away.
Okay.
So it's not quite the movie.
High growth tech stocks like Zoom or Peloton surged in 2021, but faced a significant setback after 2022. Now, recently, these stocks have risen again. And do you think now is a good time to invest in this tech stock? Highly small, and innovative, and
Yeah.
profitable,
You know-
unprofitable.
You know, individual stock investing is very difficult. It's very hard to pick that one winner. It's very hard to pick that avoid that one loser. Now, if you have a market cap weighted index, the market cap structure benefits or rewards those companies that do well and punishes those companies that do poorly in terms of weighting. So I think an ETF in certain areas like thematics make a lot of sense if you're trying to weight into that exposure than saying, is it the right time to go into Zoom? Is it the right time to go into Peloton? If they're in some broader ETF, I think that's the way to play the exposure.
Is the right time to buy some broader ETF solutions?
Yeah, there's always a right time. First of all, there's $8 trillion in the US of ETFs. There's over $10 trillion globally. So they're just another structure, this great, fantastic structure that allow you to diversify and trade on an exchange. Some of the areas I think have gained notice this year are obviously the AI story, as well as what surrounds AI. What's important to AI? Data. How do you store that data? You store it in the cloud. Software services, companies that have a recurring revenue business model are very important. So cloud computing. Cybersecurity. Cyber attacks are getting ever more complex. New solutions need to be developed, and companies are continually developing ways to protect individuals, companies, governments. In some cases, it's actually being mandated. Again, a recurring revenue business model that makes a lot of sense. That, again, I think is an area that an investor should be exposed in their portfolio.
Throughout this year, still AI enthusiasm right now.
Yeah.
And so those stocks also, not like NVIDIA, but those stocks also have risen a lot. Some advise me that you needed to wait till the AI boom some little bit cool off. What do you think about this kind of advice?
I don't. Stock prices go up and down. They're not a straight line. Directionally, if they're a good company, well managed, have good margins, directionally they're going to move up over time if they continue selling products. A company like Apple, for example, hasn't really announced what they're doing in the AI space. They're always typically the second mover. They're looking at what other players are doing, Google, NVIDIA, Microsoft. Do you think Apple's not going to be participating in the AI space? They want to kind of contextualize what's going on and come out with this incredible product that is cool, that the market's going to love. So that's just one example. So I don't think it's over because it's just starting. We barely scratched the surface. We don't know exactly where it's going to go. But we know that it potentially will improve efficiency. And in a time when there's a big demographic shift in many different countries. So,
if the U.S. economy has a soft landing and Fed cut rate next year, is it better to invest in small cap and the cyclicals or than the Magnificent Seven?
I do think small caps certainly will benefit from a reduction in rates, and that they're already rallying based on future expectations. What's the stock price? It's the cash flow of future earnings. So the market looks forward 1, 2, 3 quarters. So it's already expecting that the Fed is going to cut rates at some point in the future, and certainly would be beneficial to companies that have to access the capital markets.
There is a saying that it's a kind of a rotation right now, but next year the economy going down, slowing down, and that's not a good time to invest the small cap. Somebody saying.
First of all, the economy is slowing down, but again, the market looks forward several quarters, and small caps have lagged so much relative to the broad market. I think there's an opportunity here.
Okay, got it. How likely does the SEC appear to approve a Bitcoin spot ETF? And when do you anticipate this happening?
Well, there's two components to it. So the potential spot ETF approvals, it's a two-step process. The first process is the 19B4 application, which is expected to be approved in January. Then after, if that gets approved, then over the ensuing months, individual firms will try to gain approval for their ETF. So I think that could take several months. So we're talking end of first quarter into second quarter, where you actually see a Bitcoin ETF come to market.
Oil is currently trading around $70 a barrel. And how do you view the outlook for the oil?
Barring any sort of exogenous factor in terms of oil cuts by OPEC or disruptions in the flow of oil, I think we are kind of in a range-bound area for oil, $70 to $80 a barrel. But if there are disruptions, that can move meaningfully higher. The China story has puttered, so the consumption story in China is not very strong, which could accelerate prices in oil. If that picks up, that could change it as well.
Recent incident around the Red Sea.
Yeah.
Do you think it will affect some oil price?
If it's extended, it could. But I think it's contained for now.
I'd like to know about the recent trend in the ETF industry and which ETFs are gaining a popularity and what are the reasons behind their popularity?
So for the better part of this year, you've seen a big flow into fixed income or income-oriented ETFs.
Right.
So a large flow into covered call funds, as well as other treasury funds, money market substitutes, and that's been a big area because yields have been so high. More recently, we've seen somewhat of a shift into equities again because of the fear of missing out.
What is the best ETF theme? What are the best ETF theme next year you expect?
Yeah, I'm not...
Top three.
The best themes are, I would say, cybersecurity and cloud computing and AI, robotics and artificial intelligence, because the CapEx cycle is still strong.
Okay. Thank you very much.
Thank you.
For your
감사합니다.
Oh, yeah, great. Concise and insightful answer. Yeah. I hope to see you soon.
Me too.